Hey guys, hello and welcome to Moneycontrol. I'm Manisha Gupta, and the commodity that we're talking about today is natural gas because the prices continue to be quite volatile into this one even as we are headed towards the holiday season. So take a look at the US natural gas prices, and we are trading at a 9-month lows onto this one. The latest trigger clearly comes in from the US inventory data where there has been a drop but a lesser than the expected at 87 billion cubic feet. The expectation of market was 93 billion cubic feet. This is even lower than the 5-year average, which was at around 124 billion cubic feet. So whichever way that you look, the sense of the number is that we are looking at lower demand into the US markets. The US exports in the meanwhile have been on the stronger side, but that is a factor, or that is a number that the markets have already factored in. The second point to watch is that the wind power has reduced the gas generators in demand in the markets there, and that's weighing onto the prices. So the electricity is now being generated by wind power rather than gas because the markets are making use of this cheaper source than the gas, and that clearly has been yet another factor which is weighing on. And then the Freeport plant in Texas, which remember was shut in the month of June, is ready to reopen as well, and that means that the supply concerns or disruptions that we saw coming in from Texas also perhaps are going away right now. The Europe gas prices also have seen a decline. That one is trading at a 6-month lows. Here as well, the stocks and the inventories are quite at a comfortable level. The Russian gas via Ukraine still continues to come into the Europe, and when you look at the inventories itself, Germany's storage is nearly 87.2% of the capacity, and an average European Union storage stands at around 83.2% of the capacity. So that seems quite comfortable. And for the month of Jan as well, the expectation is that we are perhaps working with milder weather forecast, and that means that the demand is not going to be so strong as expected earlier. The next 2 or 3 days are quite important because you have a winter snowstorm coming in Canada and parts of US. UK also has seen a couple of snowstorms or snowfalls already, so that demand will come in. But for the larger part of January, the expectation is that the weather is going to be milder than expected, and that's weighing onto the prices. If you also look at a month on month and the prices for this year, all of those metrics actually show us in the negative. So whether it's about the US gas prices, European gas prices, UK gas prices, in the last 1 month we have seen a decline anywhere between 24 to 30%. In this year as well, all of these 3 gas varieties have seen a decline of around 30 to 32%. So clearly not a very positive year for gas when you look at the year-end targets here. But when you look at the year itself, we have seen a very big range into this one. The US natural gas prices saw a low of 3.5 and a high of nearly $10 per MMBTU. I mean, that's a big range right there. For the Indian MCX prices also, the low has been at around 300 and something and the high has been at 700 something. So we've seen that 400 rupees per MMBTU of a range here as well. The expectation is that for the next couple of months, we perhaps are going to be working in a very narrow range of about 4.5 on the lower side to perhaps 6.5 to 7 on the higher side. This is per dollars MMBTU for the US gas prices. So the range gets narrower, and we perhaps are not going to be looking at the kind of highs that we already have seen in 2022. So the markets believe that the gas prices are not going to be so expensive for the next 2 to 3 months is the expectation. The concerns perhaps could be coming in when the summer comes or when the storage starts happening for the next winters. Now for this winters, markets do seem quite sorted and assured.